report its quarter 3 earnings, and it looks like a steady set coming this time round. The retail segment may see revenue jump of 10%, while higher refining margins may aid the O2C segment. My colleague Ashesha is now joining us with what to expect from Reliance.
Well, yes, big boy Reliance Industries is all set to report its numbers, and we are expecting sequential as well as year-on-year growth this time around. Consolidated revenue this time is expected to come in at about 2,58,330 odd crores, which will be an increase of about 1% on a sequential basis and 8% on a year-on-year basis. Ebitda margins, meanwhile, are also expected to expand. We are expecting EBITDA margins for Reliance Industries to come in at 18.5% versus 18% that the company had reported in the second quarter, which is an increase of about 50 basis points on a sequential basis. Let's talk about the segment-wise performance then. First up, Reliance Retail, where we are expecting 10% revenue growth and about 5% growth on the EBITDA level. Now remember, higher footfalls on account of GST-led rate cut are likely to aid numbers for Reliance Retail this time around. Margins are expected to contract for Reliance Retail on account of RCPL demerger and rising quick commerce resilience that we have seen in the quarter gone by. As far as oils to chemical and O2C, that is an oil and gas business is concerned, O2C EBITDA is expected to see a jump of about 10% on a sequential basis. Remember, we are expecting good set of numbers from the oil to chemical business on account of higher refining margins. As far as gross refining margins are concerned, they are expected to come in at about $12 per barrel versus $8 to $10 per barrel GRMs that the company has been reporting for the last 6 quarters. Oil and gas EBITDA, meanwhile, could see a marginal decline on a sequential basis. Telecom business, that one is also expected to report strong set. We are expecting 2.5 to 3% revenue growth and about 2.8 to 3% EBITDA growth this time around. Average revenue per user could come in at about 213 to 214 rupees per user per month, which will be an increase of a marginal 1% on a sequential basis. But any kind of management commentary around new businesses, around telecom price hike, especially before Reliance Jio listing, will be very crucial this time around. But yes, Reliance Jio is expected to report strong set, and on a consolidated level too, Reliance is expected to report strong set of numbers, both growth on a sequential as well as on a year-on-year basis.
All right, that is what we are expecting from big boy Reliance. But let's go across to my colleague Ashesha yet again to find out what are we expecting from Reliance Jio this time round. Let's take a look.
Well, yes, Reliance Jio 2 is expected to report a growth both on a sequential and on a year-on-year basis. And let's start with the revenue figure, where for Reliance Jio, we are expecting revenue at about 32,770 crores, which will be a growth of nearly 3% sequentially. EBITDA margins are expected to largely remain stable near that 54.3% mark, and EBITDA 2 is expected to see a jump of about 3%. But ARPU, average revenue per user, will be an important metric to watch out for. Last quarter, it stood at 211 rupees per month per user. That is expected to rise to 212, 213, which will be an increase of about 1% on a sequential basis. Any kind of management commentary around around tariff hike will be very crucial this time around ahead of Reliance Jio's listing. But yes, telecom business is yet again expected to report strong set of numbers.
All right, thank you so much, Ashesha, for getting us all those details. So let's watch out for big boy Reliance. But yes, of course,